Welcome everybody to our 23rd episode of Bay Area Housing Market Town Hall. This is a town hall that we created for you guys to ask questions directly to speakers. And because the issues that we always find that there's these information gap between consumers and local real estate industry. So we just want to make sure that we are here providing education and information to you as consumers. Maybe you're investors, maybe you are just a regular home buyers, but most importantly is to empower you guys during difficult times and difficult decisions. So hopefully this segment helps you guys out. Our Bay Area housing market, we always have it recorded and then posted on YouTube channel. So feel free to subscribe and listen to it again. And today I am really excited to have invited a good friend, Chad McCall, to talk to us about his creative ways to help you jumpstart your real estate investments. Chad has been investing since 1998 and he trains thousands of investors in 5 countries. He built his real estate investing business from ground up. He also started investing when he was only 14 years old. I'm going to be sending my kids to him soon so that he can show them how to start invest in the real estate. He has done over 500 deals so far, and he shared stages teaching with top entrepreneurs and influencers like Tony Robbins, Magic Johnson's, Pitbull, Grant Cardone, Richard Branson, Sylvester Stallone, and many, many more. And just to let you guys all know how I met Chad was that we were at the Real Estate Wealth Expo in 2018, and we were in the speaker room, and I just saw this fancy hairstyle, and I was like, oh, that's Chad McCall. I was looking at the speakers program, and so I just went up to say hi, and yeah, that's how we met. Hi,
yep.
Chad.
How are you? Oh, it's good to see you. And just by the way, you were speaking there as well with me at the time. Like we were like almost, I mean, we're in different stages, but you were there too, just like me. So it was great to, hear you speak and share your knowledge there with thousands of people. So, kudos to you too.
Thank you. Thank you. That's right. I do have something to share. This was the poster I found back in 2018. It was you with all the stars there.
Yeah. Long time ago. Yep.
That was us. I have to put this picture up. That was us.
That's right. That was me and you. That's right. I remember that.
So thank you so much for being here. Like I'm moving you from the Real Estate Wealth Expo and then put you here. At this.
I'm so glad to be. I'm thrilled to be here. When you called me, I was like, oh, I'd be honored to talk. I'd love it. Let me talk. I love talking to people in California, especially.
That's awesome. So I know we have probably a lot of questions, about how to invest in real estate. I definitely want Chad to start telling us a little bit about yourself, your experience level, and what can you do to help us to jumpstart into these real estate investment career.
Well, you gave a great, little, thing about the market there. I loved it. Great slides, very intuitive. You did a lot of research, and I see this all the time. The same thing, Helen. So many people do research and they get into the data, and sometimes it can overwhelm someone just getting started as an investor. And this is what I want to mean. Like if I'm talking to people that are brand new, getting into real estate investing right now in today's market, it's a completely different conversation than I have with people that have been in this market for the last, 15 years. Now, let me explain the difference. If you've been investing in the last 15 years, you didn't do anything magical or anything to write home about. Anybody that never read a book in their life could have bought a property in the last 15 years ago, and today it's worth so much more than you started out with. So congratulations, you did it when the market shifted, you got in and you made a lot of money. But that doesn't make you a real estate investor. That makes you getting in at the right time and you're benefiting. And listening to your, opening monologue and all that training, it's so right. That's where a lot of the numbers came from, is people don't realize like a lot of prices went up because a lot of individuals, they rode out buying that one property or that second property. They made a ton of money. Then they sold and now they're upgrading. You've got a lot of people going from the middle class properties to homes above the median home price. And that really messes up the data if you're a brand new investor. I really want to stress that. So this is where it transitions to the new person getting started right now, is a lot of people that were buying had the money, had the equity. We've got more equity than we've ever had in the history of the country, in the, this last several years, because when the market crashed before, we had no equity in anything. Now we've got a ton of equity and people were smart enough to start using it, Helen. And so they were able to buy more. And that's what's pushed prices up, where people could get loans. Why? Because they've got the 20% now to put down and people are buying. So people are upgrading from that old median home price. That's moving up and they're buying up. And the people in the old median are now buying in the upper and the jumbos and things like that. That's really what's shifted a lot. But the new investor, everyone that's moving up, and doing things, that's not the market. That's probably the most safe for you starting out brand new. When I teach people in 5 countries doing 5,000 houses, guys, I'm just telling you, when you're brand new at it, you start out with what's the most familiar with an area, what drives the economy, what drives the market. It's the entry-level housing market. Now, no matter where you are, California to New York to Arkansas to Mississippi, you name it, the entry-level market is really what drives it. And as you can see in some of your statistics, who's going to be buying some single family homes, right? Some big firms are going to come in and buy some, and they're buying companies that own a lot of single families, right? So they want to do that. They're not going to be buying $500,000, in, Arkansas rental properties, right? Because the numbers aren't going to be there. What they're going to be buying is properties in Oklahoma, Texas, different markets where they can buy them for 150 and rent them out for 2,000 a month and those types of things. So they're going to be in a different market than a lot of us are going to be playing. And believe it or not, they can afford to pay a little bit more and they can buy bulk. Where what we want to do is we want to be smart about it. And we want to pick the right markets, but we also want to pick the right deal. And I was looking at your condos. California is the secret thing about townhouses and condos that a lot of people forget about there, Helen. I love California in that case because everywhere else, I mean, some states, right? Florida, a lot of condos, the nicer areas, like by water is what I call them, have condos and townhomes. Like your California, you don't have the exterior costs and renovations and sprucing them up a little bit. You've got everything you can load and jam pack in the interior and make it nice. And your numbers are pretty solid. They're pretty safe. And that's a great place and a great way for any level investor to start, is right there in California. I was a long-winded but it's easy to get into. They're cheaper in certain markets, and you don't have exterior renovations and costs that can really eat into a budget when you're a brand new rehabber. Just wanted to throw that out there real quick.
No,
Sorry.
absolutely. I think I absolutely agree with you. We have so many clients who came in and say like, oh, we're first time home buyer. And then we have to identify which area to buy for them because they already know for a fact that this is my first home and eventually I might move up and then this property will become a rental property. So also, we have to look at what area have the growth is good for employment and it's easy to rent out. So those are, but by the same time, you don't have to worry about the exterior cost of renovation, just like what you were saying.
Yes. And so if you're going to really get started in real estate, it's, pick the right area, and knowing how to do that. And some things that I look at is I like to see what people are buying. And you had some good statistics there and showing where people are buying and, and finding out price range. But if you're an investor, what do you bring to the table? If you're going to get into areas where, people are paying above asking, the only way they can pay above asking in those things is when you're buying on market properties. And I hate to say this, I love my realtors. I love everything that people do as my realtors and my agents and my licensed people. But as an investor, your very first one, you might want to have a different hat on and think about finding something that's off market to help you pad your, statistics a little bit and pad your cushion, so in case you need to sell it, you've got a built-in profit margin. Find that off-market hidden gem, then that can be your catalyst to get your next property, or to move up or to upgrade and build some equity in. So I'm going to recommend someone finding an off-market, under the radar deal, especially in California.
That's a really good point. So we always have investors who come up to us. I mean, I'm a realtor, right? So, and we used to work with so many investors. The first question is, do you have any off-market deals? So just to let everybody know that realtors, we have a fiduciary duty for our seller. If we are seller's representative, we cannot lowball an offer for the buyer. It's our duty to get the best price possible for the seller. So it will be very it will be very difficult to say you will get an amazing deal, because then we are not doing what we're supposed to do for our sellers. If we are selling it to you, knowing that, you know, it could have sold for more. So you're absolutely right. So then that means that they will need to look for some off-market stuff. So where can they look for off-market stuff?
Oh, great question. Where can you find off-market deals? Well, a lot of times they're right in front of you. You know, it's almost like prospecting as a realtor, like you just said. That's a good point there. You've got your fiduciary duty to get the highest price and stuff. That is so true for a particular seller. Always remember that one. Certain sellers, yes, that is exactly what you have to do. You've got to get the highest and best. But I'll give you an example here. I'm going to ask you a question. Okay. Is if I've got a foreclosure sale coming up in 2 weeks and I give you an offer, I'm not listed with an agent. I say, Helen, I'm going to put a cash offer in with this seller. Can you tell that seller you can get their property closed before that foreclosure date? How can you guarantee that you can get it done within that short window that's going to best serve that homeowner?
Exactly. That's a really good point. As a matter of fact, if it's in that case, what is the best, I should have said, best interest for the seller?
Yeah, there you go.
It doesn't have to be the price, but what is their interest? So that's what we have to.
And you know, it's good that you picked that up. A lot of agents, and I spend time training a lot of large, you know, firms across the country about how to work with investors, and agents really, you know, the dialogue and the understanding of both sides, because there's an agent hat and there's an investor hat, and you wear both. But there's a lot of times there's a confusion between the two of how to balance out what is really best. And sometimes it's fast. Sometimes it's the ease of transaction. Sometimes it's, I know someone here that's going to perform. It's like, hey, I know this individual, Chad, you know, seller, he is going to close on your deal. We've just closed other deals. He's going to write you a check. He's not going to have to walk through your house during COVID times. I know you're in a tough situation. I know you're worried about having a sick family member. I know that you lost a loved one, and you know what? You just don't want to bother with showings and everything else. He's willing to pay this. It's a great, you know, it's a solid offer compared to the circumstances. Those are the types of scenarios that you can work when you have motivation. And this is the other thing. A lot of investors, you ask me, how do I find off-market deals? Well, I don't just call the phone book, you know, I don't call a sphere of influence, and I talk with friends, you know, and, you know, ask them, you know, neighbors who's downsizing or who's looking to sell their home. You know, I don't follow traditional rules that way. I've got to put on my thinking hat and say, all right, what am I going to do to find off-market properties? Motivations come in many ways. And right, you just mentioned a lot of the motivations here, you know, a couple of things in your slides. Evictions are coming up. If you knew how many landlords from across the country, and I do deals in 48 states on a constant basis, you know, hundreds and hundreds of these a year. So I get hundreds of phone calls per month from landlords that are freaking out right now. Okay, hundreds. So you were just thinking that on your stats, there's a few, you know, eviction cases here and there popping up, but think about what you're doing as an investor. There's not millions of investors in the country. Okay, according to the data last year, only less than 200,000 investors purchased and flipped a home in the last 18 months across the country. So you think there's this absorbent amount of competition out there, and there's really not. There's a lot of wannabe investors, people that say they're investors, but there's really not a lot of people that get in there and actually work the deals, work the opportunities. And if you look at the big scheme of things, think about it. How many properties, if there are evictions, you can make an impact in your life on 3 or 4 deals a year, Helen. Like, that's all someone needs. You know, in California, you can do 5 houses and be sitting so much beautiful. It takes me 20 houses in Oklahoma to make what I can make in 3 or 4 in California.
Yeah, actually, that's a good point. I always tell people is that just think small, start small, because if somebody talk about real estate investment, you're immediately thinking about, oh my gosh, like all these people talking about they own thousands of units, right? It's like how I would never get there. But just imagine just owning one additional investment property, what that can do to your retirement in the future. So definitely it's worth start thinking about it now, even though you're not planning on owning tons of units, but just one additional unit, it will change a lot for your retirement. But it's kind of like addicting though. Once you start one, you're probably going to start another one.
No one owns just one investment property. It's either 10 or more or one. That it's kind of the thing is that everyone owns at least 2 houses or 10 or more. There's a really weird area between the two when it comes to investors. Now, I tell people that when you're looking at evictions, all it takes is a couple disgruntled landlords. Okay. They're going to file evictions. They're going to be delayed. They're going to put in the work of, I'm trying to, get income coming in from this property, especially the ones that are going to be hurting are the investor landlords that have owned their properties less than 5 years. So that's a really important point. So if you really want to have a really hot motivated list, is the deed date on a property. If an investor's purchased the property in 5 years or less, they're really hurting because they've got mortgages. They know that the property hasn't been paid for. So you look at your minimal equity properties in a 5-year or less period when they've purchased, because just imagine they've only really got 1.5 to 2 years of real, income coming from it, which wasn't enough to really make an impact for them. And then they've had 2 years of no income. They're going to be pretty bitter about the whole situation of investing and doing more and getting out of this and saying, hey, you know what? I've made some appreciation. I've got a little bit of equity. I want to sell. Now, not all of them are going to want to do that. But again, when you get 2 or 3 or 4 people to do that, that could change a realtor's life. And so if they're brand new, right? Getting the listings on those can be, 6-figure paychecks for you. Okay. And so all it takes is a couple of landlords or some that have owned properties more than 15 years. The deed date's really important for me when I look at it. Why do I like the deed date? The deed date is critical because I know they've built up equity. They've seen a 15-year appreciation. They've seen 15 years of equity, even though a majority of all their equity has been in the last 24 months. Again, they're like, oh my gosh, I'm beating the system. The market's changing. I mean, you know what? I'm going to cash in. I'm at the peak. I'm at the peak. Well, you know what? You can do that and work on a really good deal because all you need is a few of those investors that have had properties to say, yeah. So you got a couple of those that have had them for a long period of time. You get a couple more that just recently bought it. Now you're sitting at $250,000, $300,000 a year in income, either from listings or from purchasing a few properties from those, investors, or past investors, which is really, really important. It's a great way to do it.
That's an awesome tip, is that deed, meaning that the closed escrow within the last 5 years. Now, realtors, you better know how to get those lists. I know most realtors know because we have our contacts from the title company, and we give business to, so they can send us the list. Or you can go to different websites. Sometimes they scrub the phone number and email addresses. For investors, people who are not realtors, do you have any recommendation how they can get those lists?
Well, your tax assess office is also going to have this information. If anybody really wants to do some research, you can see when the property was put in their name. You're going to be able to go back, and it's free. A lot of things I talk about, it's free access. I don't have a license, because I do deals in a lot of different areas and a lot of states. So I don't want a license, but I've got people in those areas that have that if they need it. But I really spend a lot of time teaching people that don't have licenses and they have to do the grassroots real estate. The reason why I say grassroots, let me just bring this up to everyone. When you're starting out, how many deals were purchased and sold and rehabbed and flipped and built and tore down, or whatever you can possibly think of? How many were done before the internet was created? 10 houses, maybe 1,000 houses. How about hundreds of, thousands and millions of properties across the country, right? Have done before the internet. The internet makes us faster. It makes us a little bit better once we have the knowledge. But if you can't do real estate without a computer, you're going to have a tough time sometimes to really beat the market. Okay. Just understand that, knowing how the information is compiled, the data that we use, where does it come from? It has to come from someone. Recording properties, right? Has to be done by a person. Someone's updating documents, the legal process. Okay, to post that foreclosure list online, right, has to be done by a person after it's been filed. And by the time it hits a website, it's a couple weeks later. And I've been searching data all over the country, and there's an average of about a 2-week gap from when it starts to when it actually becomes visible online in a lot of areas. And some areas don't even keep up to date with the data. So the reason being, if you start to scale your business, for you seasoned investors, be careful getting really dependent on like the computer or software or anything. Know how to compile and reference, verify and validate data that you're getting so you understand it. Because right now, this is the time where fortunes can be made in this real estate business, even though the market's on an incline, yes. But this is what can be life changing for you, is right now knowing what to do when it comes to getting started.
I can't agree with you more in terms of like, even though the pricing sounds ridiculous right now, I really believe that there's always money to be made in any market if you buy it right. It's all about, just like what you're saying, it's too easy for people to say, I'll buy it and then I'll wait for the market to ride it. It's like you're riding the market, there's no skills into it. You're just lucky in a sense, right? So but then if you're buying it right, you're willing to make those kind of effort to do a lot of research on your own and scrub the list, you can actually find some really good deals there. Now, we always talk about, I think actually the biggest question for most people is like, but I don't have the money. How do I start if I don't have money?
I get this all the time too about the money, is where do I get the money from? All right. Well, easy. I'm going to give you a couple easy answers for it, but I want to ask a question just to make sure that I get everyone thinking the right way. Is, what do you need the money for? When you say, I don't have the money to buy a house. Well, if you say, Chad, and when someone calls me, I don't have, I need to fund a deal. I was like, where's it at? Well, I don't know. I'm looking. Okay. Well, what's the price? I don't know. I was like, do you have it under contract? No, not yet. I was like, okay. So you start to ask a lot of questions like, I don't even know about the deal. So that's what an average person is going to do when it comes to buying a property using an agent, right? They're going to say, hey, come show me some houses. Okay. You're going to ask them, what's our budget? What's our price range? So, have you got a pre-approval letter, right? We need to know. But as an investor, we get freaked out. We don't want to go out there and get these pre-approval letters to go buy investment properties. I get it. I understand. You shouldn't get pre-approved. What you should do is let the asset qualify for you. Now, how do you do that? Depends on what type of property. I just helped someone get their first fourplex with an FHA loan. They only make $40,000 a year, and they just bought a 4-unit with an FHA loan with hardly no money down. Like, it was just pennies that they put down to get this property. Now, don't have a lot of income. That was a route that they wanted to go. But do you need that traditionally? No, stay non-traditional when it comes to getting your money. And the best way to do that is find the off-market deal. When I tell someone I've got that $1 million property right now, I say, hell, I got a $1 million property. I've picked it up for $680,000. It needs about $30,000 worth of work. Well, how much would you lend me on it? Any lender would say, I'll lend you $750 on this. Right? I mean, because they'll go 75% most of the time, depending on what type of deal it is. But you've got after repair value investors. You're going to have as is investors that's lending on property based off the as is value of the property. If I see that you've got a little bit of money, you can do the rehab, and then we'll do the funding on the property. That's totally different. I see those type of lending. There's actually, when working with large funding corporations globally, there's about 1,100 different options when it comes to Helen, and people don't realize that. About 1,100 plus options that I actually talk about. I train on a whole day when I do my live event. It's nothing but, where's the funding? How do you get the funding? And then why do people want to come to you for funding? But I'll give you guys a tip. This is my little ninja trick for anyone. If you was like, hey, you're not answering my question, Chad. How do I find the money? Who's got the money? Okay. Well, the foreclosure sale. All right. How about this? A lot of people say, hey, the foreclosure auction or whatever, right? Anyone that's buying at the foreclosure sale in California has a lot of money, and they're paying cash, and they're paying right now. You're not waiting. You're not funding it later. The individual showing up and bidding has funding, and they've got a lot of it. I've met a lot of my funders in California at the auction, seeing who's bidding on the properties. Okay. Very easy way to do that is find out who's buying cash. And what they're buying cash, you get to see what type of properties that they're funding. Then what do? I go back to my house. I look up on the tax assess records. I see, all right, great. Who's that person? If I didn't get their name, I find out, I verify their information. I find out, okay, great. Who's on the deed? I look it up and say, all right, did they borrow that money? Oh, wow. I just saw that they borrowed the money from, ABC 123 LLC. Well, the guy I thought buying at the auction wasn't really the funder. It was ABC123 LLC. So guess what I'm going to do? I'm going to call ABC123 LLC and say, hey, this is Chad. I see you're funding foreclosure properties over here at the sale. Great. I've got a property just like that. What are your requirements? I just watched what the guy paid for the property, Helen. I know what they're funding on. So they know the area, they're funding in the market, they're doing everything, they've done their due diligence. You can skip to the front of the line by going to the people who are currently lending there. And if it says the name of the buyer was Bill Johnson, the third, guess what? I call up Bill Johnson the third and say, hey, you just bought that foreclosure property there at the auction. That's great. I wanted to buy it too. But how many deals are you currently working on? I'm working on 5 or 6. Okay, great. Would you be interested in doing another property or funding a property for me? Or do you have any you want to sell? I mean, heck, as an agent, I can pick up 2 or 3 listings just from that. So there's my little tip for you. So no more. There's my free coaching for everybody. So
okay, so this is the biggest thing, what you're saying here, right? I hope like all the people who want to invest and ask that question understand is that it's not about where you can find the money. It's find the deal first and then find the money. Without the deal, you cannot find the money. And trust us, if you find a deal, money little will just come to you.
Easiest thing in the world is finding money.
It's so easy. Yes. But when you find a deal though, I hear people a lot, hey, I have a property here that off-market deal selling for, let's say $1 million. Do you have anybody interested in it? You gave me no information. Why would I don't know if anybody would be interested in it. Tell me how much is the rehab cost. Yeah. Tell me what is the after repaired value. What's in it for me as the investor? Then I can tell you if I will be interested or not, right? So if you find the deal, obviously run the number, making sure that it makes sense, then pitch it to your whatever. I mean, maybe you can start from your sphere of influence first and say, hi, I have this deal. And then see if anybody would be interested in make whatever 7%, 10%, 25%, whatever return on investment you can give them. And then go start calling. One of the website we use, and I'm giving you guys the secret here, is prospectnow.com. And a lot of realtors use that. And then we get phone numbers, although I have to give, put some disclaimer out there, is the rate of like the correct number is very low, but is a numbers game. Investors, realtors, we're doing the same thing. It's all numbers game. The more you call, then you will get 1 or 2, and you just need 1 or 2 to make it work.
That's exactly right. That's all you need is a couple. And again, some people say, oh, foreclosures aren't happening. Well, we have right now probably over almost 100 short sales going right now in my office. And people like, oh, short sales aren't going. Oh, you better believe they are. You have no idea the wave of people, because again, it's not that it's an exorbitant amount and here comes the boom. It's just there's been a pent up average number that we always have. And when they don't have the year that we had last year, those still have to come with any other normal time. It's just like, hey, that's how their toilet paper shortage happened, right? Just sometimes the shipments of toilet paper just weren't there. It wasn't like we used more toilet paper than normal. The trucks didn't come with it. So now guess what? We don't have an inventory, the ability to liquidate these foreclosures. And now they're starting to come and they're backlogged and they're starting to liquidate. And, it was taking 600 days to average to do a short sale and do a foreclosure property. Now we're going to have to cut that in half. Now it's going to be a lot less. And there's things that happen. But again, it's things that happen in a market. What are constants? Once you're a bad money manager, you're always a bad money manager. And that means people that are buying houses are going to run into problems and they're bad with their finances. Things are going to happen. It's unfortunate. Not everyone, we're not going to be in a country that is absent of foreclosures and missed mortgage payments and missed car payments and missed credit card payments. And that means everybody would have an 800 plus credit score. It doesn't work, right? And the individuals that had a lot of the FHA loans, and from my higher ups and friends, we're talking over 25% of the FHA loans across the country are in default right now. Mm-hmm. So that is a big number. Now, that's not your California 800, 900,000, a million, 2, 3 million, $4 million properties. That is the average low entry level barely getting by, getting qualified full doc loans where, they were tapped out to even get the loan and to come up with the down payment, getting gifting money to get the down payment qualified for them. And then those individuals been living off of unemployment benefits, maybe haven't been back to work. That's the bread and butter individuals that are having a tough time right now. And if I told you a statistic out of New York, about 8 million people haven't made a mortgage payment in the last 2 months. North Carolina's had 1.4 million. Tennessee's another 1.5 million people haven't made their mortgage payment. Georgia's almost pushing 4 million. Okay, guys, just add those millions of numbers of people up that are running into some issues. So what's going to happen? California, #1 state for bankruptcy filings. Bankruptcies are a great lead source. Agents, you really need to get your game on working on bankruptcies. If you don't, I'm one of the few people that train on bankruptcies and working those and knowing how to do them as an investor. If you're an investor, get your game on working on bankruptcies, knowing chapter 13s, chapter 7s. Very, very important because your market is hot for it. It's coming. That number is consistent, but a lot of people are filing bankruptcies right now and forbearances to buy more time because they don't know what to do because the prices are high. When prices are high in markets, that's what people do. A lot of filings, a lot of delays, a lot of buying time to be able to figure out what to do because they got to call a timeout. That's what they're doing. They're backing up. They don't know if they should punt or go for it on 4th down. All right. For those sports fans, but that's the economy that we're in right now. But again, it's still the same stuff that we normally deal in. And it's not different than any other place. It's just, we've had a little bit of a delay and it's starting to run into the back of the bumpers of the other foreclosures that's coming. So there's another tip for you. Bankruptcy.
That's awesome. Bankruptcy. So if you have friends who are in bankruptcy law, maybe you need to make friends with them now. Well, I want to go into, I know there's some questions here. Celine Simon, she's actually from HAYLEN. And she said, "Hi, Chad, you look so much like Aaron Rodgers."
I wish I could throw a ball like him, that's for sure.
Her question is that which asset classes, multifamily, office, retail, warehouse, do you prefer to invest in and why?
Single family all day. I stay in my lane. I love single family property. Now, again, I consider single family anything, 4 units or less. Once you break commercial lending and stuff, then I call it commercial. But I like to stay small single family, entry level bread and butter properties because I've been through one crash. I've been doing this way before the first one. Um, you know, Sometimes we don't see but one of them in our lifetime. We could potentially see another one at some point. I know what it's like. I've been there. And the price of the properties that I'm in, if it hits the fan, no matter what, the market can drop 40, 50%, and I'm still, good on any loans, and I'm free and clear on most houses. Because again, I don't like to mortgage a lot of properties either. I like to have free and clear properties and a majority of things I can, as much as I can, or really down low if I needed to buy new and, pull my money out, through Burr or whatever. But I like single family. It's strong. I love the independence of the people that I do rent to and lease to, because I feel that I get a different type of environment. I mean, again, I do this all over the country, so I've got to average it out of, if I stayed in one specific market, I'd probably pick, multi-unit. Like if I was in California, I'd say, I love multi-unit because, it's so expensive. I can't spread out. But when I go elsewhere, I can spread out. I'm ride out a lot of appreciation, a lot of equity and things have come to me in the last, 2 years by being spread out and being in single family. So I do like a lot of single family properties. That's my lane.
I agree with you. It's kind of like what you focus on. I know people who just like, I only want multifamily, and I know people who only want industrial or
Yes.
just office or triple net. So it really depends on, everybody has their own preference. What works for you, then
I'll tell you something interesting though. In South Carolina, I just participated in a big old auction in South Carolina 2 months ago, and I was buying commercial properties at 34 cents on the dollar.
Wow.
Yes. So residential was still at 52 cents on the dollar. So that's a, interesting thing in the market. Why? I mean, it's the times that we're in a little bit, like you said earlier, people in certain offices, certain locations, certain business districts are going to be different. California business districts, San Francisco, LA, Seattle, those are going to be different markets. Your Minneapolis's, your Chicago's versus, Charlotte, North Carolina, Orlando, office buildings, certain types of, office space and different retail space the values are going to fluctuate a little bit right now. We're going to see a lot of new businesses coming from this pandemic. You got to realize, since our last crash, if you looked at the businesses that came out of the last crash, I mean, which ones were there? I mean, you've got some of the biggest, businesses in the world, Uber. You got all kinds of like big, I mean, big. The top 10 companies in the world have came out, right at the last crash times now. And look what's got to come from, when we start moving now, what coming out of COVID and who knows what, if there's a shift, there's going to be a lot of new things coming, that the space is going to, have value. It's going to have different values. And just like the last crash, time healed everything. If you were the worst investor in the world and you maxed out 125% loans back in 06 and 07, and you bought 50 homes and you were a bartender, right? You did that. If you could have just figured a way to keep them right now, you'd be that smarter than Bitcoin investor today, because you'd be, tens of millions of dollars in real estate you would have made if you just figured out how to hold on to them. So time can heal anything. So just so you know, if you make a mistake like that, make sure you can withstand the surge, and time will fix it for you. With some inflation that we have coming, and the other things that can happen, like in California too, Ellen, like if you're a smart investor that doesn't have the budget that another investor does, like that was mentioned in the auction. I can watch a person, I've done this in California. I was in Palm Springs, doing deals. I watched an investor, a developer, big pockets, had a chance to talk to him. I watched how he had a system built. And this was many, many years ago in the very beginning, my first $1 million+ transaction, building a property. I was like, you know what? I don't have the system, the team, anything like these guys have and I had a place just luckily enough right by where these guys were doing their renovations. So I waited. And just by them building and doing it faster than I could and being better at it and being more efficient, they made me an extra $350,000 on my property without me lifting one finger and doing one thing.
Yep.
All I did was I just waited a little bit of time and I was able to benefit from the guys they renovated, they were listing it, they got it sold. And then there's my ugly one sitting right there that just went up 300,000, all because these guys were faster than me, had more money than me, they're better than me, and they were smarter than me. But I didn't do anything and I paid 350,000. So in California,
that's actually a really good point.
You can do that.
Yeah, that's a really good point. That's I go back to like market research. You can find places that are emerging markets where you ride with that's why every market cycle you can still make money by looking at where the emerging market is. Yep. So you found a place where it's developing, it's going up. So that's why you are able to make that kind of equity. Yep. So Marvin also has a question. It's what are your thoughts on real estate crowdfunding platform like Fundrise, Crowdstreet, et cetera? If you lack capital, are these good places to start?
Oh man, that's a good question. I've never used it. I've never endorsed it. I've never had anyone use it. I've never recommended anyone to do it. And what's Marvin's experience? Is he a seasoned investor or
Marvin is our HAYLEN agent, and I know he has been very interested in doing real estate investing as well.
Then I would say, you know what? You don't need to do that. You don't. Don't worry about it. There's there's 1,100 other ways to do it without going that route.
Yeah, especially I think in our market, honestly, again, we'll go back to the original tip is that find a deal and then it will come, honestly.
I wrote this down. I write it down. It's on my computer on a Post-it note. And I always want to make sure I say this no matter what. It's speculation is the #1 killer for everyone on this call.
Absolutely.
No matter what. I will tell you, it's the #1 killer for every realtor. It's the #1 killer for every investor. It's the #1 killer for every business entrepreneur that's sitting on the fence of a widget creation. The speculation.
Yep.
Don't be a speculator. Just, no matter what you do. And when you're raising capital and you're trying to do some of these, a lot of that, a little bit is speculation. And that's why I don't like to speculate. And when someone tells me, what do I stay in? Well, single family. Why? Because I can buy my single families no matter what. I can buy them at such a discount that I have the ability to withstand, appreciation, depreciation, crash, whatever else. But again, I don't speculate to say, you know what, I'm going to buy this property and I'm going to make it because and I'm going to get my agent commission on it. Then I'm going to do what Helen does when it comes to interior design and make it look all beautiful. And then I'm going to list it, and I've got to pull up. My agent group here is so good at buyers, and we're going to have that thing sold in a month. Well, you know what? I don't have that, the retail side dialed in that way as efficient. So I can't make up my money on the listing commission. I can't make up my money on my picking of the right colors and choosing is it, in the right decoration. I have to have someone else do those things. I can't cut those corners.
Yeah.
So I need to get my property, off market. I need to get a discount on the property because I can't force appreciate it. I can't make it nice enough to get that number higher. I can't push my comps. And I've never, ever sold a property or pushed a property or evaluated a property where I'm setting the new comp in the area. I never do
cannot
that.
tell you how many investors I have met and asked me the same question. Oh, I think we can sell at this price afterwards, right? And I'm just like, well, we don't have comps right now. So it's just like what you're saying, speculating. And I have seen investors who lost money because they have speculated the future value of the property. And then you just need the market to do a little downturn, then you will lose money. So definitely, I absolutely agree with you. Unless you know for a fact that you got a really good deal and that you have this buffer, don't speculate your future value.
That's right.
Jose Monar, he works with a lot of investors, and he said, if given a choice, what would be a better investment, a duplex or single family?
Well, I mean, are you going to get the duplex at the same discount you can get the single family? I mean, that's going to be
good.
I mean, if you can, great. But
do you invest in duplexes, or you focus on just single family?
Oh no, I love duplexes, triplexes. I like triplex, fourplex, but that's about the max when it comes, because the areas that I'm doing I'm majority of my properties in, they don't have a lot of huge multi-unit types of properties. I'm always dealing with the average individual homeowner. I'm dealing with with an individual where it's a neighborhood.
Right.
Those are the types of properties, people that have been in properties for a long time. They've had properties, they're outdated. Properties are built in the 30s, 40s, 50s, 60s, somewhere in that range. But duplex is strictly going to be off of income, and that's what I look at, those types of properties. Now, I do like to sell duplexes to retail buyers, and I can make more profit when I sell to VA. So when I do multi-units, I do those by military bases and universities. I like to make sure I can do them by military bases as most often as I can across the country. I love that angle.
Oh, awesome.
Well, VA loans are the only 100% loan in the country.
Yeah.
So a lot of people don't realize that. There is still 100% financing out there. And if you want to go to make sure your buyers are always qualified and you don't have any problems, you deal in markets where you have the people that can get VA loans. We have a lot of soldiers coming back from overseas. They're going to have the ability to get, VA loans. If you've got properties in these areas, then there you go. When they go under contract, you don't have to worry about financing stipulations. You got a pretty good job to get it
to buy the home. It's not easy for them to get an offer accepted. So definitely work with the VA. So we have 2 minutes. We have 3 more questions. Denny asks, as far as the real estate slowdown, seems like a perfect storm of school starting and Californians in Hawaii vacationing. Do you think we will see a buying frenzy before the traditional holiday season slow down?
Ooh, a buying frenzy. I personally see it's going to stay. It's still a buy. If you ask me, what is it? It's still a buying frenzy. It's still, I mean, it's competitive out there. There's nothing going to change. I don't see any drop. I don't see it spiking by any means, but I don't see there being a cliff that we're going to fall off where nothing's going to happen. The only thing that can change the market is if interest rates creep up. Yep. I just want to let people know, if interest rates go up, then equity is going to drop. That type of thing can happen in properties. That can put a little bit of a speed bump in the road if we do see anything move with the rates.
I absolutely agree with you.
But other than that, I think we're still on pace because, again, you have inflation there helping out, increasing prices of stuff. So I think you're fine. Now, the vacation type properties, second homes, third homes, I still see that's kind of still the same. But when the entry level homes, you'll probably see the very low entry level homes slow down during the holiday because a lot of the individuals don't like to be moving during that time. People that have a lot higher income, properties well above the median, like probably in your guys' market, like 2.5 million and more. they don't change anything. It doesn't matter if it's Christmas or Easter or Halloween or whatever. But the smaller times, you're going to see it pick back up at the end of January after the holiday.
I agree. Yeah, a lot of people ask the question. It's like, oh, I'm just going to wait until the price come down a little bit. I personally don't see that the price is going to come down, but I do see that it will be less aggressive as beginning of this year. But I just don't think that the price will be like, crashing like some of these reports are saying.
I think California is averaging 4 offers a property, right? I think it's somewhere in that range, somewhere
Yes.
around 3.9 to 4 point something offers per property. I think that when you have that, you're not going to see a decline. I think even if you wait for the slow season, you're still going to be at 2.3 to 2.4 offers a property. Not your 4. That would be the extent, as if it dropped 50% of the competition, but it's still going to be competitive because you have so many offers per property that's on the market.
Yep. Okay, 2 more questions. What are some factors to consider before investing in an area of property? How does one go about identifying which areas may appreciate in the future? I guess that's kind of the same question, Anthony and Lindsay. Lindsay is also asking, what is the best area to invest in California? Kind of similar questions here.
Oh, I like that. I mean, just a speculation area. Vallejo is still, affordable. That's a good market, a little ways away from, but again, right now, it's all areas. It really isn't a specific one. It's where you can get the best deal, even if it's 2 or 3 hours away from you or 2 or 3 states away. It really doesn't matter what type of market that it's in. Right now, the markets is all based on price. And I'll give you an example. Helen, if I told you right now, I'll sell you your neighbor's house. I'm going to sell it to you for $3 million right now. Would you buy it? If I just told you $3 million, your neighbor's house, would you buy it for $3 million?
Depends on like, what's the value of the property?
What your neighbor, that you live next door, that lives next door to you. How about the neighbor?
Then I know that my neighbor's house is not worth $3 million.
Okay, so you'd say no, but how about this? What if I said, I'll sell you your neighbor's house for $700,000?
Oh, yeah, definitely. I'll be
picky. Hey, you didn't ask me anything else, no other questions. Only thing that happens was your neighbor's house and you knew the price, right? That's honestly what people do. Is right now we're in the market. If the price makes sense, it's a good deal. And that's really what it comes down to. Is I know that if I'm buying over here in this area, like I just picked up a property, and what's crazy, in Mississippi, somebody's like, what's Mississippi? I don't know anybody in Mississippi, but I just bought a house there for around $40,000. The as-is value is $90,000 as is. So I'm renting it out for $775 a month. Pennies for California people, right? But what would it take? What's my return on that? What's my cap rate? That's 2% a month. So what would it take? So 24%, what would it take to get that 24% return in California? How much outlay financially would I have to put out to get 2% a month on my money?
Right.
It's kind of hard to think about. So now you just got to start thinking with the number is, what does it take based off of myself, my budget, my risk threshold to get the best return. Like some people in California love a 3%, return. I'm like, gosh, I won't get out of bed for that, even though I'm up early, but it doesn't make sense when I want to go get the majority. I want to get the best return for my money that I'm putting into play in the market. Because I will tell you, just always think of this too. If there's anything I can leave anyone with on this call is, you'll say, Chad, why do you do in all these different areas and so many states and all that? I'll give you an example. If I buy your house, Helen, your neighbor's house, your neighbor next door to that one, and your neighbor next door to that one, okay? If I buy yours today, fix it up and sell it for $3 million, then I got to buy your neighbor's for $1.5 million, sell it, fix it up, sell it for $3 million. Then I got to buy your other neighbor's for $2 million now. I got to sell it, fix it up. You see, I'm driving the price up on myself.
Yep.
Investors, please don't do that. A lot of times you've got to be very careful. I'll buy multiple properties if I can, or very short windows before I start working on one of them if I'm buying in a close area, because what is the neighbor going to tell you when you try to buy, or someone close by? They're going to say, oh, yeah, what's your house worth? they're going to know based off of what their neighbors is. Everybody says that when you try to buy a house from a motivated seller, like, well, my neighbor sold theirs for 400,000. Why are you giving me 300? What? Where did they get that number? Zillow or something like, well, my neighbor listed theirs. Then I got to tell them your neighbor had granite, your neighbor had, this, your neighbor had a pool, your neighbor had a perfect, master bathroom remodeled. So then you got to start telling them all the bad things about their house. And you don't want to do that. So be very careful driving yourself out of your own market, or you won't invest very long. You'll invest very short term because you won't be able to get that next deal that matches that deal. And if you're wholesaling, you got to be careful too, because you won't be able to sell another property at the same discounted rate to the same investor that just bought one for you. So you'll be in the business very, very short period of time. That's what a lot of investors do. They're in it. They're one and done, one hit wonders. Yeah. We don't need a lot of those Milli Vanilli people in real estate investing. Okay. We just need people that are going to be in it for the long haul and be very smart.
Gosh, you gave so much valuable information. I told you there's going to be a lot of questions and we might have to stay an extra hour, but I know we cannot. Now, how can anybody who is interested to talk to you more about real estate investing, and how do they contact you?
I keep it simple. If you learned anything, I use this one piece of paper right here. It's a blueprint. It's a deal flow. It's 6 steps. And I talk about locating, evaluating, negotiating, contracting it, funding it, and exit strategy. I follow it religiously. It's how I made my first 7 figures in this business. I do it every single year with this little piece of paper. I want to give it to you if you want it. There's a link. You can share it in the video or however you want to, Helen, for everyone. Just share the link. You can go there. It's free. You're not going to get spammed or anything. Just download it and kind of follow. And it tells you the process. What I use as far as my source of deals. I can just tell you, like, there's types of sources. There's types of strategies, long-term, mid-term, short-term. You're not just going to be a cash flow investor. You can't be. You're not just going to be, a wholesaler. You're not just going to be a fix and flip guy. You got to understand there's different opportunities. Okay. The motivated seller is going to dictate really what your strategy is going to be, because you can't just go out there looking for that, off market, $100,000 equity house. The sellers don't just raise their hand and say, hey, wholesale my house, so there's things you got to look for, and you just got to be very patient, make a good calculated decision when it comes to starting, but have a structure, have a standard operating procedure. When you do this, I do the same thing I've been doing for over 20 years, and it's done about 5,000 houses. And so just so you know, I follow the same process. I'm a very simple person. I'm from the Western North Carolina. If I can do it, anybody can do this. I was going to tell you, my town's really small, and hey, I'll just tell you, like, when I say before the internet, it's my excuse, because I didn't really know much about computers or anything when I first started this at all. So if I can do it, you can, but just be very, don't rush yourself right now. Be very smart, be very calculated about the deal that you choose, and make sure it's someone that, needs what you do. Like, it's a motivated seller. Don't make a bad deal a good deal. Don't do that. If I can give you some advice. And I teach people how to find out, what is your strategy going to be? Is it a short-term, a mid-term, or a long-term deal? If you can do more than one strategy with that deal or the opportunity that comes your way, it's a good deal. If you can only do one thing with that property, if you're pinned into only one strategy, be very careful. Okay. It might not be the right one for you. So that's it.
I know a lot of people want to know how to get in touch with you. Just know that with that chart, I will be including in the email when I have this recording ready to go. Usually it's probably this weekend, latest by Monday or so. I will have this video uploaded onto YouTube, and then I will email it out to everybody, including the link to download the chart. And also any contact information, if need be, I will include that as the chat allows me to. But and thank you so much. And for those people who really want to know, as soon as this video is available, go to YouTube and search HAYLEN Group, and then you'll be able to just subscribe to our channel, and then you'll be able to get notified as soon as this video is available. So thank you so much, Chad. I cannot thank you enough. And I really know that all these questions been, like, a lot of people been wanting to know how to invest, what are the tricks, what are the tips, and I absolutely agree with you. Find the deals first and just focus, be focused, set up a system, and hopefully that chart will change somebody's life after this.
I really hope so. And I talk fast. I know I always get that, so just bear with me. Sorry, if I talk fast. I love doing this. I love doing these trainings. Thanks for inviting me. I hope I was able to teach somebody something. And this is things that I talk about in California, because I know a lot of your people are California, I know your office is there. These are things that I know are going to work in California. If I was telling you things in Texas or North Carolina, I'm going to tell you a couple of things that are going to be different. But I've done a lot of deals in California, so I know exactly what that market has to offer. I know what you can do there, and just it's a great market. There's going to be people leaving, but guess what? As many leaving, there's going to be many people coming back. So I never buy into any of these things that you hear out there or see. Just shut off all of those things that you can possibly think of, the negativity. Nothing matters when it comes to that. Don't think about politics. Don't think about COVID. Don't think about this. Think about what you do to help people. And if you put people before profits, you'll always be successful, because there are a lot of people right now going through tough times, regardless of what it is, that need your help. As an agent, you can help a lot of people, at a bad situation. As an investor, you can help a lot of people. As a landlord, you can help a lot of people. This is a catalyst to really be someone that can serve a lot, and you can have a huge impact. And if you do that, you're going to be, set yourself up for a lifetime of success.
People before profit. I cannot emphasize that more, because this is how we can be a better person. And like you said, change. We have the power to change people's lives. And that's what my book's title is, Power to Change Lives. But it's true. Just don't always think about profit, because landlords are not all bad people. Realtors are not all greedy, so we can do something to change the industry and also other people's lives. So again, thank you so much, Chad, for being here, and hopefully we can do another session.
Oh, anytime. Thank you so much, everyone.
Thank you, everybody. Bye.